Alrighty, guys, who forgot to flip their flapjacks? Because they're on fire. No, like they're literally on fire. MongoDB, they stock down 27% here today. Marvell Technologies down 19.8% here today. AppLovin down another 18 percentage points here today. HIM stock down over 15% today. That stock is down around 50% just in the past couple of weeks. Palantir stock down another 10.7% here today. You see big tech stocks like Snowflake getting hammered today, down around 12%. Netflix down 8.5%. Oracle down 6.5%. Nvidia down almost 6%. That stock now at $110 a share. Tesla, rough. Another 5.6% down here today. The biggest memory chip company out there, MU, down over 5% here today. Oh my gosh, okay. The worst part is we're not even in a market crash right now. You're seeing stocks get obliterated 30, 40, 50% all over this market in a very short amount of time. Like we're talking, this has all transpired just in the past few weeks to the last month. The S&P 500 is down 6.6% from the peak. 6.6% from the peak. This is not a market crash. Then that makes you think, what would these moves be if we had an actual market crash? That is something to think about. Already, two subjects we want to think about and talk about here today, okay? Where is this market headed? Are we headed, is this just the start of an actual market crash? Or is just a quick flush and we're going to resume higher, okay? So we're going to speak about that at the beginning of today's video. I got some very important data I need to show you guys in this video here today. Second subject we'll speak about is two stocks I sold out of completely here today. We're talking 100% sales on both of these, okay? And yeah, took some pretty sweet profits, okay? Appreciate y'all joining me as always. One thing only I need from you guys, like the sign in my garage says right there. Need you to smash the like button on this video. This is a little bit of a beast video, putting this together for the last several hours for you guys. I hope you appreciate it, and I appreciate y'all joining me. And additionally, I appreciate everybody subscribe to the channel. I think we're over, we're getting close to like 840,000 subscribers here on the main channel, so I appreciate y'all for being here. Additionally, you know, if we went back to the sentiment a month ago, 2 months ago, a lot of people were like, I don't need to know this stuff. I just throw money in stocks and they go up. This is easy. I don't need to know income statements and balance sheets and how a PE ratio works and all this stuff. You know, Jeremy, I don't need that. Well, people got slapped in the face, and now people are waking up and realizing, oh crap, I should be taking this serious. If you're ready to stop gambling in the stock market and start becoming an actual investor, learning what you need to learn in regards to actually value in stocks, judging companies, things like that, pin comment down there today. Click on that, fill out a form. We'll see if we get you access to my entire library of premium courses, teaching you everything I've learned up here in the past 16 plus years. Stop gambling the market and let's get serious about this stuff, okay? Alrighty guys, let's get rolling here, okay? Very important I start right here. What I'm showing you in front of you right now is how much the indexes are off from basically the peak, okay? The Dow 30, the Dow Jones Industrial Average, is down 4.4%, so I wouldn't even call the Dow in a correction yet. A correction to me is anything where the indexes go down over 5%, okay? Corrections usually in that 5 to 15, maybe 20% range. And then when we talk about 20% more, you're really talking about an actual crash is occurring in the market, a real true bear market's happening, okay? So the Dow, I wouldn't even put that in correction territory yet. That's the craziest thing about the Dow. S&P 500, I would put that in correction territory. That's down 6.6%. NASDAQ, I would definitely put that in correction territory. That is down 9.7%, okay? But let's be very crystal clear about what's going on here. This is a very normal little correction we're having in the market. This is not a crash. This is not a major correction. I'll tell you, as somebody that's been through multiple crashes in the stock market, as somebody that's been through bear markets, as somebody that's been through a lot of little corrections and major corrections, this is a normal little correction we have going on right now. And so understand, if we start talking about the NASDAQ going down 18, 19%, and the S&P 500 going down 13, 14%, right? Then we can start to talk about we're actually having a large correction. That's still not a crash, by the way, but at least we could say that's like a large correction, right? Now, this is where things start to get really interesting because you're looking at the Dow down 4.4%, S&P down 6.6%, and the NASDAQ down 9.7% from the peaks, right? But look at how damaged a lot of the what was very hot stocks are just off those little moves, right? Hood's down. Hood's lost over a quarter of its value in that time, or around a quarter of its value. It's down 25%. Tesla's lost well over 25% of its value. It's down over 27% on that time. Palantir's lost around 35% of its value over that time. That MongoDB company lost around 35% of its value over this time. AppLovin's lost almost half of its value, 48% over that time. And HIM stock has lost 51% since the market peak there, right? This is where valuation matters, because let's be crystal clear. The markets are not in a crash, but if you own Hood stock, Tesla stock, Palantir, MongoDB, apps, HIMs, right? You're in a full-on crash, right? Now, if you were buying some of these stocks, like I own 2 of these stocks, Palantir and Tesla, if you were buying them, years ago, I don't even care. Like I've made so much money, I've taken so much in profits on those stocks, and I'm still up such a ridiculous amount, it means nothing to me. But if you've been buying those stocks in the last 6 months and you didn't care about valuation, you were just plugging in money to these stocks, now you're learning a very hard lesson, which is valuation does matter in the stock market. People don't care about valuation when stocks just go up every single day and when you're in a raging bull market. But as soon as that ends and you start to get a little bit of volatility in the market, a 6.6% move in the S&P, wow, you see these stocks fall 30, 40, 50% left and right? And the craziest thing is, imagine how big these moves will be if hypothetically the NASDAQ was to go down 18, 19%, the S&P was to go down 13 or 14%, 15%, then we're going to be talking about all these stocks will be cut well over in half, and some of them will be down 60, 70, and 80%. And then that's still not even in a market crash. That's the craziest part of this. That still wouldn't even be a market crash. That's just like, oh, we're having a big correction. That's wild. Now, that leads me to a very important data that just came out here today. Let me show you this. This is a brand newest AAII investor sentiment numbers. They've been doing this survey all the way back to the 1980s, and I show you guys the survey quite often. Okay, brand new numbers just came out. Awful sentiment. There's awful sentiment in the market right now. Look at this. It even got less bullish. Let's just call it that. Okay. Now, as of the latest numbers here, only 19.3% of investors are bullish on the stock market the next 6 months. 57%, over 57% of investors are bearish on the stock market the next 6 months. That means they think the stock market is going to do bad over the next 6 months. And less than 1 out of 5 investors think the market's going to do good in the next 6 months. That's awful sentiment. Awful sentiment. Because at first when I looked at the numbers, right, I looked at the bearish numbers, like right away I was already looking for bearish. I'm like, did we hit another 60% number? And I saw 57.1%. I was like, oh, investors got a little more bullish. And then I looked over here and I'm like, no, they didn't. They actually got even less bullish. So some of the bearish people kind of went over to neutral. That's all that ended up happening in the end. So yeah, the sentiment is awful. And this is the worst sentiment I've seen in just factually since going into the fourth quarter of 2022. And here's the data around that, okay? Look at this, September 8th, September 22nd, and September 29th, 2022. This was the last time we had sentiment this bad in the stock market. So remember these numbers, right? We got 19% of investors are bullish on the market the next 6 months, 57% are bearish, okay? Look at back here, 18% were bullish, 17.7% were bullish, 20% were bullish, right? 53% bearish, 60% bearish, 60% bearish. So we're back at numbers that we were basically getting ready to go into Q4 of 2022, right? When we were in that awful bear market and we had the Fed raising rates and we had inflation and all the drama that was going on there, right? And stocks kept going down and down and down, right? Now, this is where if you want to start to think about, do we have a bottom coming, right? Start to put the pieces of this puzzle together, okay? So remember, the numbers were awful, September 2022, going into that fourth quarter, okay? Now look at this. When did the stock market actually bottom? The stock market bottomed in 2022 in mid-October, right? The downfall of the stock market started in November 2021. So it was almost a year-long, just kind of brutal market, right? But basically a month after the disastrous sentiment numbers, the market bottomed. And so if you want to kind of look out there, you can say there's a potential that the stock market could actually bottom likely in the next few weeks to the next month. So if you saw an actual bottom in the market in the next 1 to 4 weeks, don't be surprised. Because usually when sentiment gets this ugly, this awful, it's actually very often shortly after that, you get a bottom in the market. And I can show you back to data that was just a complete disaster back in October 2008. And guess what? The market bottomed very shortly after that. And then it did a double bottom in early 09, essentially, right? So it bottomed once at the very end of 08 in that fourth quarter when the sentiment was just awful. And then it double bottomed essentially in early 09. And so if you see a bottom here in the next 1 to 4 weeks, don't be surprised. It won't be the first time it's happened. We've seen this many times in regards to sentiment gets awful. Everybody gets bearish. Everybody sells. No one wants to buy. And then the market bottoms. And it's like, whoa, how did that happen, right? Now, additionally here, you have, where's all this drama coming from, right? Let's be very clear about the stock market. The stock market is, and I talked about this many times, valuations stretched. We're going, obviously if we look back in January, right? Valuations very stretched in the market in general. Any sorts of bad news was ready to get this market to flush, right? And let's be very clear where all this drama is coming from. Tariffs, what's the government up to, Doge, all this stuff. It's causing a lot of worries about how our government's going to get along with each other, right? What's going to happen with jobs? Are we going to go into a recession? Is there going to be a global recession? How is that all going to shake out? There's all these worries about all that stuff, right? And we don't know, no one honestly knows the answers to any of this. Trump doesn't know the answers to this. Elon doesn't know the answers. I don't know the answers. No one knows how all this will end up playing out. We just got to see how it plays out. But the stock market's very likely to get scared first, shoot first, ask questions later. And so that's what ends up happening. And then you have this today. Trump was getting interviewed like he does every day. It seems like, holy smokes, okay? Guys like gets interviewed more than Joe Rogan interviews people is ridiculous. So today he's doing his interview, right? And asking them questions and he's answering these questions, right? And Trump said point blank, he's not looking at the stock market. He's not looking at the stock market. And, some people like this one, not Jerome Powell, Trump, I'm not looking at the stock market. No, in all seriousness, I actually don't think Trump cares about the stock market right now. Why would he? And I laid this all out on the main channel back months ago. Why would Trump care about the stock market right now? The way he can look at the stock market, this is going to be his first 6 months in office, right? So in his first 6 months of an office, right, he just took over in January. The way he looks at that, in my opinion, and the way a lot of people look at that, is that's still the Biden stock market, right? Yeah, Trump's in office, but, it's still the Biden economy. It's still the Biden stock market, right? I don't think he cares about the stock market right now. I think he will care about the stock market a lot at the end of this year and especially next year. Why? Because then we're talking about election again, come 2026, end of 2026, right? So things start to matter again, right? Because then the stock market starts to matter. People start to feel vibes, all that. What's going on right now, by the time it's the next elections, dude, no one's going to even remember this drop we're having right now. The stock market could go, honestly, the S&P 500 could go down another 10, 15%, and no one will even remember this. Other than people like me and some of you guys watching this that are super into the stock market, right? Dude, no one's going to remember this come voting time. So there's no real, I actually believe Trump when he says he doesn't care about the stock market right now because there's no incentive to care about it. It's not election time. And it's easy to just say, oh, this is a Biden stock market. Just wait to see my stock market as my policies start to get enacted here and we start. So I believe it. But that's not comforting to the stock market itself. That gets them freaked out. Like, oh man, Trump doesn't care about the stock market right now. Like, oh my gosh, where's the Trump put on this whole situation, right? So that's something to keep in mind here. Also, I thought this was a little more worrisome in my personal opinion. This was not talked about as much, but there was a part of the interview essentially where they were asking about the market and whatnot, and he talked about it was a lot of globalist countries and almost alluded to other countries selling out of the stock market and other companies that are doing business around the globe and things like that. And I just don't know where he was going with that whole situation, but because it almost could have come across like maybe he sees the big global companies as an enemy. So I don't know. That was the kind of to me, it was at least the spookier part. In regards to the whole situation, him not caring about the stock market right now, I'm not surprised at all. Like I said, I think he'll start caring at the end of this year. I think he's going to care a lot in 2026, right? Because because then people are going to start looking like, this is your stock market, Trump, right? So that's what matters there, right? Now, I did this video back here, right? The Trump stock market will be a roller coaster back January 20th, 2025, and you can watch the contents of that video, and I lay out, basically why I'm not as bullish on this Trump presidency as I was the first term, right? And I laid out a whole host of reasons, essentially, right? And that doesn't mean I'm bearish on, Trump's second run here. It's just I'm not as bullish on the second run, right? I mean, there's still going to be tremendous amounts of money to be made. It's just not as great as the first time, right? But that was on Inauguration Day. And, you got to understand, the Trump stock market is going to be a freaking roller coaster. It's going to be filled with some great highs, and it's going to be filled with some painful lows. And I show you this here because I understand there's been a lot of people that got started in the stock market. Let's call it Rona and after, okay? And I wouldn't be surprised if, 40 to 50% of the people watching this video right now, I wouldn't be surprised if you guys started investing in 2020 or after, right? And probably half of you guys watching this were investing in stock market back in 2018. Matter of fact, do me a favor. In the comments section, let me know if you were investing in the stock market back in 2018. Please do that for me. I'm going to go through the comments. I'm really curious to see how many people were investing in the stock market back in 2018. Okay? But let me explain to you guys the 2018 stock market, because there's a potential that could be similar to how 2025 shakes out. It's no guarantee, but it's a potential. Okay? So red lines here, this is 2018 just to make it easy for you so you can really see the roller coaster ride. Basically what happened is early 2018, we had essentially a big drop in the market. And I don't want to say a big drop. It was a good size, it was a decent correction. Kind of actually pretty similar to what we had in the stock market here recently. Then the stock market bottoms in kind of early springtime. And then throughout mid-spring into late spring into the summertime, stock market went on a beast tear. A beast tear. The market got kind of freaked out here about tariffs and all types of stuff. Okay, all the Trump stuff that was going on at that particular time. And then the stock market came to the conclusion, starting around March, April of 2018, that it got too freaked out. We overblew all this stuff. It's not going to actually matter that much. And everybody said, let's go own stocks again. And so the market went through an absolute beast tear. And then, starting around September of 2018, people started to get worried again. And they said, you know what? I think there's going to be problems here. I think we got issues here. I think there was a lot of recession fears. There was a lot of fears around big tech stocks and, those doing bad. And the market had a large correction. Still not a crash, but it was a very large correction. And it was very painful. As somebody that went through that market, it was painful, man. That late 2018, I'm telling you, it was painful. If you look back at kind of mid to late December, we were on pace for the worst December in the stock market since the Great Depression, folks. It was ugly, 2018. And you look back at the year of 2018, and it doesn't look that bad. I think 2018 as a year, I think the market was only down like 6 or 7% or something like that. Like, it was a pretty small number. Like, if I recall, 2018 wasn't even down double digits. So it looks like, it wasn't that bad of a year. Dude, 2018 was freaking crazy. That was one of the craziest years I've ever invested in the market in terms of getting that appetizer and then getting that main course. Dude, that was a wild market. And the swings straight up coming out of that appetizer and the swing coming out of that main course, I mean, look at what the market did basically when it bottomed. It bottomed kind of late December that year. And then look what it did over the next couple months. It just went on an absolute tear. So that was a wild market and a crazy VIX at that particular time as well. Volatility was great again, some would say, right? Insane. And so just keep in mind, we could get something like that playing out this year, right? Where maybe we bottom here in the next few days, or the next couple weeks, and then, people start to say, you know what? All this tariff stuff, yeah, we're all freaked out about that, but it's not as big a deal as we thought. The Doge stuff, people were like, oh man, we thought it was going to ruin the jobs market. It actually didn't. And the next thing you know, all of a sudden, everybody comes piling back into Meta, nvidia, Google, all the stocks they want to own at the end of the day. And all those ones start to catch a big bid, and then they just go on a beast run spring, summer, right? And then maybe people start to get freaked out again in the fourth quarter. It's a potential. Don't bank on it, but at the same time, if this is the way 2025 plays out, don't be surprised. That's a big thing I'll say to you guys, okay? Now, what about for the gang of people that are saying, you know what, this is just a start, dude. This is just a start. We're going to crash this S&P 500, 25, 35, 45%. Epic crash is coming, right? Ruin the stock market. All right? So you can't just say stuff. You got to back it with data. You got to show numbers, and you got to really run through like how something like this happens. A lot of people talk, not a lot of people do numbers, is what I found. If people did a little more numbers, they'd talk a lot less. That's the other thing I found. So if you want to know what it's going to take to get the stock market to crash, I'm talking S&P 500 doesn't go down 6.6%. It goes down 26.6%. It goes down 36.6%, 46.6%. You need the biggest weighted stocks to crash. Let's be very clear. You say the stock market's going to crash. You're telling me that Apple's going to crash, Microsoft's going to crash, Nvidia's going to crash, and keep in mind, that's from here. Amazon's going to crash, Meta's going to crash, Google's going to crash, Berkshire Hathaway stock's going to crash, and Broadcom's going to crash. Because this is where all the biggest weights are, right? 7% plus of the S&P 500 weight is Apple. And keep in mind, a lot of these weights are even bigger in the NASDAQ. 6% plus is Microsoft. Nvidia is just under 6%. Amazon's around 4%. Meta's around 3%. Google, if you add up, both sides of Google, it's, close to 4%. Berkshire Hathaway is 1.8%, and Broadcom's 1.8%. So how realistic is it to get these stocks to crash? Well, here's the deal. Apple's a damn tough stock to get to crash. I'm going to be honest with you guys, especially nowadays because the services business is so respected and people look at that as just a cash cow. And they just buy back so many shares. It's so tough to bet against Apple. And I mean, the thing with Apple is look at how well the stock has held up. And they have not one product right now that people are like genuinely super excited to go get right now. Not one freaking product. Now, imagine if they just have one or two products that all of a sudden, people are excited about. Like, what happens if the next iPhone's an actual banger, right? And look at how well the stock's held up with nothing. I mean, it's just crazy, right? So it's tough to bet against Apple. Be honest with you guys. Microsoft, 29 forward P, double-digit growth. Good luck betting against Mr. Softy from here. Nvidia's at a 26 forward P with double-digit growth. Good luck. Amazon's at a 31 forward P with double-digit growth, and this is pretty much about the cheapest forward P you're ever going to see on Amazon right now. Good luck betting against Amazon from here to crash. Meta, 25 forward P with double-digit growth. Google, 20 forward P with double-digit growth. Berkshire Hathaway has like $330 billion of cash. People, if anything, if there's a crash, like people, if anything, are going to want to pile into Berkshire Hathaway because they're going to say Warren Buffett's going to buy the whole world on, a significant discount. So good luck betting against Berkshire Hathaway. And they just also have so many stable businesses that at the end of the day, they're just going to keep collecting money. And Broadcom is up 13% after hours. So good luck betting against that one. At the end of the day, that's tough. Those are tough bets. So what you need to have happen if you're going to talk about getting those stocks to crash, you need their growth rates to completely collapse. If that happens, then maybe we can talk. If we talk about Meta going from double-digit growth to negative growth, the business shrinks. Okay, maybe we can get a crash then. Same thing with Amazon. But the tough thing is, even if that happened, people would be looking at those and like, as soon as the economy recovers, like they're going to be fine. They're going to be back to double-digit growth. So, woo! Not impossible, but it's tough, really tough to get the market to crash, right? So the moral of this story, I would say, is one, I'm not looking to bet against stocks right now. No, I'm not. The time to bet against stocks, in my opinion, because now people are looking out there and they're like, dang, I got to start hedging. I should start betting against stocks. Look at all this money being made, right? Jeremy, he's making all this money from Walmart put options and Costco put options. Oh my gosh, now they're all of a sudden they're thinking about hedging. They're thinking about going short stocks. They're thinking about buying put options. I think you're late. Not to say there's not any money to be made there, but now you've got to pay crazy premiums because guess what? Every other person is thinking about the exact same thing. Back in December and January, no one was thinking about hedging. Except me. I was thinking about hedging. I was hedging my portfolios, but no one else was doing it. So if you look back at what premiums you had to pay on stocks back in December and January, it was so cheap. It was so incredibly cheap. And even at the beginning of February, so cheap to hedge because the VIX was dead at that particular time. And because people just thought everything's just going to go up for all of eternity. And we're never going to have a correction in the market. We're never going to have a market crash. Nothing. So now I can tell you whatever, you're going to be paying 2x, 3x, 4x the amount of premiums that people were paying just, when it wasn't a popular move. So now I will say it's going to get a lot more difficult here to get a lot of these stocks down and to make any significant amounts of money on puts. I actually think it's a significant risk now at this point in time, okay? So I'm not looking to bet against anything. I already did that, and that was fun. Second, I'm going to be buying stocks tomorrow. Yep. Third, I'm going to continue to build out a beast portfolio, as I do year in and year out, right? And I build these incredibly strong portfolios that they get through whatever. Like the public account, look at the public account. Like whatever, all this market drama is just fine. It's just fine. It'll be, in the ocean, but at the end of the day, it's a massive yacht in the ocean, right? Now, that makes me come to this. Let's say we're at my house and we're going to play a game of chess, okay? And you take one piece of mine, and I'm like, oh, I lost. Took one of my pieces. I'm done. How ridiculous would that be, right? It's silly. Like when you play a game of chess, you ought to understand like you're going to lose a piece. You don't just give up the game. But what happens in the stock market is people get slapped and they give up. They're done. They lost one piece and I'm done. I'm done with this game. Come on, man. Like no. You understand corrections in the market and crashes in the market are part of this game. It's what happens. And so you got to understand, like, keep playing the game. You don't just give up on the game because, you went through a correction. Like, that's come to be expected. As when you play a game of chess, you're going to expect to lose pieces. Like, it's part of the process. And the best opportunities are actually when you lose a piece, as it is many times in chess. Many times you could set somebody up pretty good if you're a really good chess player, suck them into taking a piece of yours, right? They took a piece, and they just totally screwed their whole game up, right? The same thing happens in the stock market. The best opportunities are when you get a major correction in the market, even a little correction in the market, and certainly when you get crashes in the market. That's the golden opportunity to go grab the queen at that particular time and go for the king, okay? And so just understand that. Second thing up here, 2 stocks I sold out completely here today. Let's talk about that. 100% sales in regards to these, okay? First one up here, Costco put options. Damn, they treated me good, okay? I already took massive profits on these Costco put options, and I slayed the freaking dragon. I slayed it. Like this was, I can't believe I slayed 2 dragons. Like Walmart and Costco. Like these were thought of as you can't slay these dragons, and I slayed them both, okay? Costco put options. I'm looking at those here today, right? And obviously earnings were going to be after hours, and I said, damn, man, it was showing 17.20 here on Fidelity, and I ended up selling them for a lot more. I ended up selling those for $17.97. Somebody paid for those for me. But I looked at Costco, and I'm like, I'm up 66% on that. And once again, ended up making, 70+%? And I'm like, do I really want to hold these over earnings? And I was like, don't get greedy, Jeremy. Take the profit. And so I took the profit, and I moved on, right? And so we slayed it, man. Like that's the thing. I'm like, I already slayed the dragon of Walmart, and I already slayed the dragon of Costco. Do I want to risk this? Like let's say Costco goes down in earnings, but it doesn't go down that much. And remember, these are way out of the money. I mean, these are 880 puts. And so somebody needs this stock. Once again, somebody paid me $17.97. So they, let's call it $18. So they need Costco stock to go down to $862 by August 15th. Possible, but you're going to need probably a market crash for that to happen, right? Or things to really deteriorate massively in Costco, which is always possible, but it's a much tougher game. I just played it when it was easier because when I got into those Costco puts, no one was thinking about that, right? When I bought those Walmart put options, no one was thinking about that. All people could do is just funnel more and more money into Costco, and I was like, you guys really doing this, right? And so, yeah. That was sweet. That was sweet. Next move I made up. So now I have no Walmart hedge at all. Now I have no more Costco. And so, whatever happens with those stocks, I don't really care now at this point in time, right? And then this one, as far as the public count goes, Monster, right? Monster, I looked at that one here today. I'm up 11%, up $5,600 in a pretty short amount of time in regards to my Monster shares here. And I was looking at some other opportunities in the market out there today, and I'm like, gosh, like there's just some way better places for my money than Monster right now. And Monster was also kind of a hedge in case I was wrong about Celsius, but now I'm even more confident than ever in regards to Celsius. So I'm not really worried about that one. And I looked at it and I'm like, there's $55,000 sitting there that I think will do fine in Monster over the next few years, but it's not like Monster's, I'm going to, 3x, 4x, 5x my money over the next 3 years. And there's some stocks that I was buying here today and I was looking at here today that I'm like, I'm going to 3x, 4x, or 5x my money over the next 3 years in some of these other stocks with very low downside risk. And so I said, I need that $55,000. So I made the move to sell all the shares and just move out of it today, which is not very commonplace for me to sell out a position completely like that right away. Usually I sell in batches. The reason I did with Monster is since it was such a small position. If it was a really large position, I would have sold out in batches, but it was only 1.9% of the public account. It's not much at all, right? So given that it was 1.9%, out of that portfolio, I was like, let's just make the move here today and plug that money into some other opportunities I see out there because there's some stocks that I think are incredible opportunities, right? And I just did a video, less than 48 hours ago on the main channel here. It looks like 97,000 people have gotten to see it so far. 4 stocks I'm buying March 2025 edition, where I went into those 4 stocks in detail. And remember, whenever I'm doing those videos, very important you guys are always paying attention to the contents of that video. Not just what 4 stocks is it. The 4 stocks is like that's cool, but like you got to understand how I build a bullish case around the stock and how I look at it from different perspectives. That's the part that's really the valuable part. People think the valuable part is just hearing what 4 stocks they are. That's not the valuable part. The valuable part is when I go through all 4 examples and here's my fundamental case on why I'm buying that stock. That's the real value there. So always remember that, okay? Now, here's what the public account P&L is looking like so far for this year. Smoking them. Oh my gosh. Making a lot of money. Making a lot of money. Like this is treating me very well. So we've taken a $9,500 gain on the Costco put options. Toll Brothers, $7,800 gain on the Toll Brother put options. $7,300 on the Walmart put options. A $5,600 gain on Monster. A $143,000 gain on Palantir. A $53,000 gain on Meta and $78,000 in Tesla. And this is once again just in the public account alone. So I've taken $30,000 in short-term gains so far in 2025. And we're only in March, by the way. And I've taken $275,000 in long-term gains. So all total, I've already made $300,000, and this is made, right? Like cashed out. $305,000 of profits so far in 2025. So looking really darn good, okay? Now, all this drama, tariffs, Doge, blah, blah, blah. This country's doing that. This country's doing this. This tariff's getting removed. This one's getting added. You gotta ask yourself, which way do you want to go here? You want to focus on the long term, you want to focus on the short term. Because the short term is going to be here today, gone tomorrow, right? Trump's going to be here today, gone tomorrow. Tariffs are going to be here today, gone tomorrow. All this stuff's going to be here today, gone tomorrow. But at the end of the day, great companies thrive over 10, 20, 30-year spans. And so you got to ask yourself, do you want to focus on all the short-term crap that's going on? Or do you want to focus on long-term great opportunities and adding to positions and building a beast portfolio that's going to help you thrive over the next 10 years, 20 years, 30 years, 40 years? You ask yourself, which way do you want to go? I know which way I always go, okay? Appreciate everybody joining me as always. Thanks so much for being here. If you're looking to apply, join a private stock group, private wealth group, get access to 1000xstocks.com. My software I use each and every day to value stocks, try to figure out if they're great deals or a ripoff. Pin comment down there, click on that, fill out a form. We'll see if we can get you access to inside my private group. Maybe let's call it this weekend or maybe next week, okay? Much love and have a great day.